Well, things are becoming more difficult for Wall Street investors who insist on the bullish economic argument. US stocks had their worst week since the regional bank crisis of 2023. Traders across risky assets woke up from their slumber by troubling data that had been predicted for some time in the bond and commodities market. Another disappointing US jobs report revived concerns. The economy is cooling, and the Federal Reserve is moving too slowly to rescue it. The S&P 500 dropped 1.7% and the Nasdaq 100 slumped 2.7%. While the reaction to the previous jobs data in early August was worse. It's the first time since 2012 the S&P 500 saw losses of at least 1.5% for 2 jobs days in a row. After rebounding from the early August swoon, traders succumbed to growth fears, driven by a steady drumbeat of dispiriting economic news in recent weeks. The S&P 500 fell 4 straight days. Credit spreads widened at the fastest clip since early August, and an index of computer chip makers plunged 12%, the most since the pandemic meltdown. Almost every sub-index across the sectors in the S&P 500 fell. The Nasdaq 100 extended its slide from a July peak to about 11%. Nvidia sank 4.1%. Broadcom tumbled 10% on a disappointing forecast. The Dow Jones index slid 1%. The Russell index of smaller firms slumped 1.9%. Wall Street's fear gauge surged. The dollar wavered. Bitcoin sank 4.5%. Oil and gold retreated. Traders are pricing in at least a quarter-point Fed rate cut this month. However, some are still betting on a bigger move, with the US stock benchmark up 13% this year. The gyrations of a mere blip in bulled-up charts. Risk-sensitive assets are still largely pricing in a soft landing ahead, rather than a recession. For all the latest news, download the WION app and subscribe to our YouTube channel.